We had the money in a savings account to meet that need. If we had spent that out of the savings account, we would be giving up $130,000 in growth in the first 40 years, $425,000 in the first 80 years, 1.38 million in the first 120 years. The growth on that money, if we're talking
So,
about thinking long range.
yes, that's what I was going
I
to say.
just have
That's
three
thinking
generations.
long range. Yes.
Welcome to the Bankless by Design podcast, where we rethink money, ditch the system, and rediscover what it means to truly thrive well. I'm Trisha Miller, mom of 7, financial coach, and founder of ThriveWell. Around here, we believe wealth is more than numbers. It's about freedom, stewardship, and building a legacy that lasts. If you're ready to challenge the norm and take back control of your financial life, you're in the right place.
Welcome to the Bankless by Design podcast. Today, I have my friend and fellow practitioner, Will Fullington, with me, and we are going to be talking about practicing the infinite banking concept with nonprofits. But before we get into that, first, Will, why don't you just tell me a little bit about yourself, where you're from, what you do, a little bit about your family, perhaps, and we'll go from there.
My name is William Fullington. I'm married, 3 kids. We're homeschooling all 3 right now. I live in Clovis, New Mexico. I'm still active duty military for another about 10 months at this point, retiring early 2027. And I'm also a ruling elder for my church in Clovis, New Mexico. It's a Grace Covenant Reformed Church.
Okay, great. Tell me a little bit of your journey getting into IBC, just a high-level overview, if you will.
Yeah, about summer of 2023, I was just starting to plan for my military retirement, what I was going to do next, getting all the ducks in a row financially to be able to weather that transition. And I heard some ads on a podcast for family banking, private banking. Those keywords were being thrown out after 3 or 4 times hearing it. Got curious to what this was actually talking about. So reached out, scheduled an appointment with the agent who was talking about it in the ads. He wasn't a N&I practitioner himself. It took probably a few meetings with him to actually hear the words infinite banking concept, Nelson Nash, and find the book. What really drew me to IBC was the family economy. Like I said, the private banking and the family banking keywords.
Were you searching for something like that, or did it just happen to come up in front of you and you were just curious?
I wasn't actively searching, but in my mind, prepping for retirement from the military, having enough money to be able to pursue what I want to do when I get out without feeling like I got to go find a W-2 job with golden handcuffs and follow some of what most people do getting out of the military. Government contractor, GS civilian, something else where they get another pension and stack the pensions. I didn't really want that. So I had over a year's living expenses saved up in a savings account. At the time, high yield was doing about 5%. And it kind of hit me as I was finding IBC that if I spend that, that's $5,000 a year plus that is just going to be gone forever. So that was kind of what made the IBC infinite banking concept click for me.
Once you spend it, it's gone unless you're doing infinite banking. Okay, so you also mentioned that you're an elder in your church. So you went from looking at this for yourself, and now you're also looking at it for your church. So tell me about that transition.
So shortly after I found IBC and we implemented it into my family's finances, read some of the articles that Ryan Griggs and Carlos Lara have written about charities, 501c3s, churches applying IBC. I'd already seen the power of it, started sharing it with the other elders at my church, and we decided that we wanted to implement it as a church.
When you first discovered the infinite banking concept, were there any challenges that you personally had to overcome?
So at first it was understanding the concept, but once it kind of clicked, then I started learning that there's multiple companies and multiple products, and each company's product is different, and they all have different writers that operate differently. And I went into the rabbit hole of trying to compare all these things,
Mm.
knowing that, hey, maybe there's a product that's best for me with a certain company that, and a different one might be better for you, and wanting to really know which one was the best for me. And at the end of the day, what we do has more impact than the company or the product. The biggest factor is what we do. But I got hung up in that space for a while, comparing 4 or 5 different companies and all the different products that they offered and trying to understand more. But
So this was a quick journey for you, really. You discovered this in 2023. We're just now into 2026. And so it must not have been too long before you decided, hey, I want to be a practitioner.
yeah, shortly after getting our policies in place, I was sharing it with my church, and the other elders saw the power of applying this, and they wanted to implement it. It took us a little while to get to a place where we were ready to actually do that. But they were on board, and at the same time, a lot of passion and excitement, sharing it with coworkers, friends, trying to find what I want to do for my next career.
Okay.
My wife
Mm-hmm.
says, "Why don't you do this? Why don't you
Mm-hmm.
become an agent and share this with people?"
Did you have no hurdles with the other elders that you spoke with?
Only issues were probably from my passion and excitement sharing it and not
Uh-huh.
being trained as an agent yet, because this
Mm.
was before I got a license and went through the NNI program. Or from my lack of presentation and education skills on this. When our church particularized, I was asked to be an elder and then primary on managing the finances for the church. So I'd already developed a lot of trust there,
Okay.
the other
Mm-hmm.
elders and deacons and the congregants seeing how I was managing the funds for the church, accounting for every penny and being prudent
Mm-hmm.
in the decisions. So that helped a lot. But something else that helped is one of the deacons was going through a finance degree at the time, and he was agreeing with it. So that helped get over some of the hurdle as well.
So tell me why a church might want to implement this and how it would benefit a church. We talk a lot about how it benefits us as families, as
Mhm.
individuals, but specifically, how do you see this benefiting a church or even any other nonprofit for that matter?
So remember, we finance everything that we buy. So
Hmm.
we're either paying interest to a bank or we're giving up interest that we could have earned. That applies for organizations and families. It's just a universal truth of money. We can store our money, our wealth, in multiple places. Most people and organizations store it in savings accounts, stocks, bonds, mutual funds, CDs, things like that. But you can also store your wealth in other assets like property or contracts. And that's what we're doing. We're moving our current savings account from the bank that we use into a contract to store the wealth there instead. In doing that, our wealth is now doing two things for us at once. It's our emergency fund, our opportunity fund, our operating fund, and providing death benefit for our pastor. We were
Okay.
only about 60 people, bringing in about 60 to 70,000 a year. So we can only pay our pastor a modest amount. It's really not adequate for what he does for us. We should pay him more. We'd like to rather,
Hmm.
but thinking long range, multi-generationally, taking this church plant to where it's a permanent staple in our community, we have to be planning for those future expenses. So we can't really increase his salary more than we have, adjusting for inflation each year. But by doing this, now our dollars are doing two things at once, providing life insurance protection for him and growing at unbroken compounding interest, allowing us to buy the things that we need as a church.
Very good. So, how did you have this structured? The pastor
Yes.
is the insured.
So the church is the owner of the policy and the payer of the policy. He is the insured. So if he passes away, the death benefit will be allocated between us, the church getting its principal back, and then the balance going to his family.
The church is paying the premium. So, because
Correct.
it's entity owned and you're sharing the beneficiary status.
hmm
Is that right? Is he actually part beneficiary?
Right now, the church is the only beneficiary on the forms when we applying and getting
Sure.
force. But we're going to change that so that it's all formal now that it's in force, and
Sure.
we'll evaluate that periodically and have it in the actual policy instead of just being in a contract.
Because as the owner, the church, you have the control and the ability to
Amen.
change beneficiaries to make it 50-50 or whatever split y'all agree upon. And did you have any trouble getting that through with the life insurance company, being that it's entity owned?
It didn't really seem any harder. There was just a little bit of extra work that we as the agents need to do, transparent to the insured and the owner of the policy. We do a cover letter every time explaining the policy and why it's in the best interest of all the parties involved. I had to do an extra couple of forms providing statements of good standing with the state as an organization and some things like that. Other than that, it was a lot like
Pretty
every other.
straightforward. It's interesting because I think we, by and large, in our society today, don't think about the living benefits of life insurance. Most people, if they were to think about how life insurance could be utilized by a nonprofit, are more apt to think, well, I have a death benefit coming, so I will name my favorite charity as one of the beneficiaries. And that is still one way, right? That is one way that people who care about their church can give more generously by leaving their death benefit behind. But this idea of being able to store the wealth of a nonprofit organization in a dividend-paying whole life insurance contract is foreign to most of us. But it is really beneficial because even nonprofit entities can struggle. So let's just think about this for a minute. As inflation grows, as it becomes harder and harder for people to make ends meet, first place people cut is in their giving oftentimes. And so then the church is suffering and struggling to stay afloat. And so sometimes nonprofits are looking for, where can we get a loan? There's cost to those loans. You don't have any guarantee you're going to get the loan. There's going to be closing costs and all kinds of hoops to jump through. So having this place where you're storing your wealth and it's getting to grow, while at the same time having access, control, and liquidity and flexibility of payback terms. How many churches did we see close their doors during COVID? Well, what if they had had something like this and they could actually borrow against it to take care of the things that they needed, but they don't have to pay it back tomorrow. So the flexibility there, while still compounding, while still growing. And really, what options does the church have for where they're going to store their wealth if they don't do this?
Yep, that'd be the savings accounts, stocks, bonds, mutual funds, and the like. I don't know about you, but I'm convicted really that if the church was to put its wealth into the stock market, that would not be responsible. It could crash and it's not there when the church actually needs it, and it can't provide the benevolence for the members, and it can't pay the salary for the pastor.
Sure.
You have a situation like COVID, and there's less tithes coming in, and then stock market crashes. Things just kind of snowball, and it gets worse. I don't believe that is good stewardship, even if 501c3 regulations allow for it. So then you're looking at savings accounts. What's the interest rate on a regular savings account? Less than 1%.
Right. Not
You're
much.
keeping up with inflation. You're getting poorer by putting money there. Okay, high yield savings account might keep up with inflation. CDs might keep up with inflation. CDs, you end up giving up some control and liquidity. It's a little harder to access, but that's about all there is available other than a life insurance contract where it is going to keep up with inflation. It's liquid, safe. It's providing death benefit as well for the pastor, and then it's a self-fulfilling savings plan.
So what a great way to create a solid financial foundation for this entity going forward, well into the future, long after this generation that may be sitting in the pews right now in the church is gone. Just the fact that you have a strategy for a nonprofit to be growing their wealth, to be protecting their capital, to be stewarding it with safety, control. There's no risk involved. It absolutely must grow. There's guarantees. There's so many things to think about here in terms of just stewardship. What does the word stewardship mean, and how are we to be handling the donations of others, because essentially that's what the church is doing. How do you define stewardship in that sense? What do you think
Uh,
about that?
I like that you brought up the word stewardship. I think many people think about it too small, especially at the individual level, where we think putting our 5 or 10% away into a savings account and then we do what we need to with the rest and we're being good stewards. Well, maybe you're being a good steward with 10%, but what about the other 90%? In that 90%, we might think we're being a good steward if we're just buying a used car instead of a new car, or getting a cheaper cell phone plan, or pinching some pennies here and there. But all of that's just still thinking too small about stewardship. The biblical stewardship is far more demanding, and it begins with acknowledging ownership, not our ownership, but God's. The
Mm-hmm.
earth is the Lord's and the fullness thereof, Psalm 24:1. I also like to think about Matthew 25, the parable of the talents. We often focus on the return that each of the servants brought in that parable. The
Mm-hmm.
first two servants doubled their master's money, while the third buried what was given to him. But then notice what was commended by the master when he came back. The faithful servants didn't merely avoid loss and bring return, they worked. And for that, they were commended. The third servant preserved the principle. The first two were faithful. The third was fearful. If we're
Hmm.
focusing on that return, we forget that it's our duty to do the work. It's God who brings the return. 1 Samuel 2:7, I believe it is, says, the Lord makes poor and makes rich. He brings low and he exalts. The results are of God. Our job is to do our duty, and that's it.
I
If
like that.
if the church is just putting its money into a savings account, accumulating, then we're not doing any work with it. And the money isn't doing any work for it either. So, how is that stewarding? We're just accumulating for what? Maybe being able to provide some benevolence to a member, be able to replace the roof on the building. But what's the long term goal?
So, did you structure that for a single premium, or are you doing long pay? And why would you do one or the other?
Yeah, we structured it as a long pay. Right now, it's going to be probably 7 or 8 years, depending on future cash flows, where we know we'll be able to max out the policy, at which point the dividends on the policy are anticipated to meet or exceed the base premium. And then the church can be hands off and just financing the things, paying PUA. And the death benefit will keep growing, which means more can go to the pastor and more comes back to the church. When a church might choose to do a single premium, probably a lot of circumstances they could choose to do that. They've got a lot of capital sitting available, at that they just want to move quickly, maybe for a specific thing that they need to do. Maybe they've got capital sitting in a savings account and they want to add a building to the church, and that's going to be pretty expensive. But if they spend the cash, they're going to lose all of the interest that they would gain on that. Having discovered the infinite banking concept, they see this. So if they move it into a policy first, all at once, single premium, that could give them a way to finance that construction faster, as one example.
Okay. You bring something up here that I think is good to clarify. They've got a pile of money. They want to build a new building. Typically, a church would say cash for that. Money's gone, building's built.
Mhm.
Great, right? But the money's gone. So why would they put it into a single premium life insurance policy first?
We have an example of this. We started out renting our location from another church in the evenings. And last August, we were gifted a building from an ELCA church here in our town that was closing up because they did not have the capital to stay open. The congregation had dwindled too much, and they didn't have the money. So we were gifted the building, which was an amazing blessing of God's providence for us. It did need a roof. We had the money in a savings account to meet that need. If we had spent that out of the savings account, we would be giving up $130,000 in growth in the first 40 years, $425,000 in the first 80 years, 1.38 million in the first 120 years. The growth on that money, if we're talking
So,
about thinking long range,
yes, that's what I was going to
I
say.
just have
That's
three
thinking
generations.
long range. Yes.
Other option would be to finance it with a bank. And maybe we pay $8,000 in interest over 5 years for that $40,000 roof. So the $48,000 paid minus the $40,000 for the roof, that's $8,000 in finance charges by financing it with a commercial bank. By financing it ourselves using the infinite banking concept, we would get to keep that $130,000. So if we paid cash, then we would be giving up that $40,000. It would not grow to that $130,000 in 40 years, or the 425 and 80, or the 1.4 million and
You're giving away future wealth because that's the opportunity cost of earning interest on the $40,000 that you could have if you didn't pay cash. I'm just trying to clarify this for our listeners because I want to know where you get the $130,000 from. But if that $40,000 had been allowed to compound in growth at 3%?
Just 3%. Math.
A modest, okay, modest savings amount. Let's say it's on an online bank account that gives you 3%, right? That's very doable.
With IBC, we get the growth, get to retain that. And then when we pay that interest, it's paid to our own entity.
It's paid back into the policy so that you can then go back and use that again the next time you have a need for capital.
A roof, a new building, a vehicle for the church, whatever the needs are.
And every time you pay it back, because there's now additional growth on that money, you actually can leverage a greater amount, which, by the way, keeps up with inflation, doesn't it? Because you know it's going to be more expensive down the road. So that growth that's happening in the meantime is also helping you have a hedge against that inflation. So by implementing the infinite banking concept, you are able to still have the use of those dollars. You're able to put life insurance on the pastor for the family's benefit, and you're able to think long range about the stewardship of the church's finances for future generations. That seems like a win-win-win. Are there any cons to this? Has anybody said, hey, but wait a minute, what about this?
So I really can't think of any negative outcomes or concerns for it. I mean, worst case scenario, the pastor passes away. God calls him home sooner.
He's protected. His family's protected.
His family has additional protection. The church gets its premium back, or it's a 50-50 split. His family gets protection adequate for what they need, and the church gets more than its premium back. If the church closes, I mean, it happens. We got our building from an ELCA church. Those funds go to another church or go up a level within the denomination. So it stays in working towards discipling nations.
The same mission.
Same mission. If the pastor moves, the policy can be offered to him to where he can purchase it, take it with him, retain the death benefit, or he can leave and give it up and the church can retain full ownership. Death benefit can still be split however the church and the pastor want to handle that. It's all written in the contracts.
And there's so much flexibility for how a church could decide to write that contract.
Yep. The only negative, it's not a negative of IBC, it's if future elders don't understand what we're doing and don't share the mission of building God's kingdom, and they cancel the policy. And what's the worst that happens out of that? The church
gets the surrender value.
They get this, which the way we're doing it will still be more than they paid in premium.
That's pretty amazing. And one of the things I was going to mention when you said, the ELC closed their doors because they didn't have enough capital to keep going. Just by virtue of you doing this, you're ensuring in so many ways that is at least highly unlikely to happen because you're not putting yourself in that same position. I think that is something that we need to spend more time thinking about and also sharing that with our churches as well as other nonprofits, because money is always an issue for these nonprofits. Whatever good work they're doing, there is a need for capital. And this can help give nonprofits a place to store that capital, to promote the growth long term, to keep it going into the generations. It's a beautiful situation. One of the details I thought that we might want to cover, there always has to be an insurable interest on any life in order to take out insurance on someone else. Just like a key person in a business, they would have to be able to demonstrate that something happened to this person. It would create a loss for the company, a financial loss. So any last comments that you want to offer on this particular topic, Will?
By managing our money in this way, we're creating a continuing capital surplus reserve, which is a concept within business finances. And that continuing capital surplus reserve is the emergency fund, the benevolence fund in the case of a church, and the opportunity fund. So you can replace the roof when you need to. You can provide for the needs of the members. And then as an opportunity fund, maybe the lot next door to your building becomes available and the congregation has been interested in building a school. Do you have the means to jump on that opportunity when it comes up?
And when you say that, like, this just opens up a whole vision for me, because for the longest time, I mean, I am a firm believer that we are to be the hands and feet of Jesus. And in so many ways, due to financial lack, the church has given up on the things that the church used to be about: caring for the poor, caring for the widows, caring for the orphan.
Mm-hmm.
These are the things that we are to be about. But if we can barely afford to replace the roof on the building, how are we ever going to get to the point where we can flourish beyond that and take those things back? We have abdicated that to government programs. So what really gets me excited is if we can get to this point where we start looking at how can we grow and build capital in the church so that we can actually do the work that Jesus gave us to do.
Yes, spreading the gospel is first, but that's just the first step in discipling the nations.
Absolutely. We just think too small, and we just think too short term. If you really think about it, this is how life insurance got started. The church caring for the widows and the orphans of the ministers that were left behind in the Presbyterian Church, no less, in the Synod in Philadelphia.
I think somebody did a podcast episode about that one.
Somebody might have. But this is where my heart and soul lives, what you're talking about here. And I just want us to think bigger. Where can we take this? Oh my goodness. We have a lot of work to do, Will. We have a lot of work to do.
And it's going to take the church a lot of capital to do it.
You got to get so. This has been really fun talking to you about this, Will. I really appreciate this. I think that there's so much more we could develop with this, but this is a great start. Will, thank you so much for coming on here today with me. And let me ask you this. How can someone get in touch with you, Will?
You can find me at reformedfinance.net, where I've got a growing body of articles on IBC and more of what we were talking about today: worldview, the specifics of IBC, the problem, process, solution. There you can also book a call with me. I'm also on Facebook and LinkedIn, and maybe trying to get some educational videos up on YouTube in the future, but that's a bit of a longer term goal at the moment.
Sure. Well, that's great. So if anybody's interested in reaching out to Will and learning a little bit more about what he's done and how he's doing it, I encourage you to do that. Otherwise, I hope you will like and subscribe to this podcast so you don't miss future episodes. And until next week, thank you so much for listening.
Thanks for tuning in to the Bankless by Design podcast, where we're done with the system and we're doing money differently. Be sure to subscribe, share this episode with someone who needs it, and visit us at banklessbydesign.com to learn how you can start living Bankless by Design.